There's a lot of discussion about the US dollar status as the world's reserve currency. What would be the effect upon the US and the world economy if the dollar loses that status as a world reserve currency?
This is something that goes with your philosophy today.
All you know is that the dollar is going to be worth less 10, 20, 30 years from now. Cash is not a place to, at that.
What do you think the probabilities are that the U.S. dollar will not be the reserve currency 20 years from now?
Oh, I think it'll still be the reserve currency of the world 20 years from now. But that doesn't mean that it's forever.
I think the dollar will be the world's reserve currency for some decades to come. I think China and the United States will be the two super economic powers, but I don't see any. I think it's extremely unlikely that any currency supplants the U.S. dollar as the world reserve currency for many decades, if ever.
Well, there are advantages to a country that has the reserve currency, and if you lose that, you lose some advantage. England had a better hand when it had the reserve currency of the world than it had later when the United States had the reserve currency of the world. If that eventually happened to the United States, it would not be, I think, all that significant. It's in the nature of things that sooner or later, every great leader is no longer the leader. Over the long run, as Keynes said, we're all dead, and over the long run, well, if you stop to think about it, every great leading civilization of the past passed the baton.
If we thought we knew what the dollar was going to do, or interest rates were going to do, we won't do it, but we would just engage in transactions involving those commodities, in effect, or futures directly. In other words, it would not be, if we thought that the dollar was going to weaken dramatically, and we won't get those kind of thoughts, but if we did, we would buy other currencies, and it would be, it might benefit Coke in dollar terms if that happened, but it would be so much more efficient directly to pursue a currency play or an interest rate play than an indirect way through companies that have big international exposure. We would probably do it directly. We don't really think much about that, because just take currency. If you look at what the yen has traded at, over the last, well, since World War II, from, what was it, 360 down to 70 some, Charlie, went at the low, and back up to 140 some, and now, I don't know, 105 or wherever it may be. I mean, those moves are huge, but in the end, we're really more interested in whether more people in Japan are going to drink Coca-Cola, and over time, we're better at predicting that than we are at predicting what the yen will do. And if Coca-Cola satisfies people's needs, liquid needs, for more and more people, we will probably get a reasonable percentage of their purchasing power of those people around the world for their right to drink Coca-Cola, or for shaving, or whatever it may be. So if the world's standard of living improves bit by bit over time in an irregular fashion, and we supply something the world wants, we will get our share in dollars eventually. And what it, quarter to quarter or year to year, how that moves around because of currency moves, really doesn't make any difference to us. It makes a difference to reported earnings in that quarter. But in terms of where Coca-Cola is going to be 10 or 20 years from now, it would be a big mistake, I think, to focus on currency moves as opposed to focusing on the product itself. And Japan offers a good example of that, because you had this, I mean, you really had a move from 360 or whatever it was to the high 70s or thereabouts. I mean, that is an incredible move in currency, and it can overshadow in the short run even what's happening in the business.
When you look at the future, there's also the argument made that this is something that goes with your philosophy today. Get out of cash and get into assets. because we don't know what's going to happen to the dollar.
Well, cash is always a bad investment.
Yes.
I mean, when people said cash is king a year ago, I mean, that's crazy. I mean, cash wasn't producing anything, and it was sure to go down in value over time. And then you always want to be sure you have enough. I mean, it's like oxygen. You want to be sure it's around, you know, but you don't need to have excessive amounts of it around. And cash, we will always have enough cash around. But anytime we have surplus cash around, I'm unhappy. I mean, I would much rather have good businesses than cash. And we found a chance in the last year or thereabouts to deploy. We came in with something over $40 billion in cash, and we've got about $20 billion now, and we've had some earnings. So we put a lot of cash to work, and I like that. No, I'd much rather own a good business than have cash.
And it is a hedge against the dollar?
Well, you can say all assets are a hedge against the dollar. I mean, but all you know is that the dollar is going to be worth less 10, 20, 30 years from now. I say worth less, not worthless.
Right.
You want to watch that. But it will be, you know, and that's true of almost every currency that I can think of. The question is how much it depreciates in value. But cash is not a place to, that.
Now, why is that?
Well,
the dollar is going to be worth less.
Because we'll print more of them in relation to the amount of goods that are moving. You know, if we dropped $1 million of cash into every household in the United States today, everybody would feel very good, except the people that invested in things that were denominated in dollars. And, you know,
Exactly.
There will be no tendency toward deflation in this country over time.
If you drive interest rates down to zero and all the countries print money like crazy, it's lifted the asset vote for everybody. And I think it really is. So they didn't have anything else to do in the Great Recession, and so they took the only weapon they had and used it aggressively. I don't think we should quarrel with that. It did cause the people who were already rich to get richer, but that wasn't done on purpose or anything like that. And I think that will correct automatically.
Do you think we should still be using that weapon aggressively?
I am so afraid of a democracy getting the idea that you can just print money to solve all problems, and eventually I know that will fail. Singapore, which has a marvelous economy, has zero debt. If I were running the world, I would like the United States to be in that position. That is not the typical, that's nobody's position. You know, all these politicians in Europe and America have learned to print money.
And if we keep at these extraordinary measures for the Fed, I guess not just the Fed here, but central banks around the globe.
Yes, but who knows when money printing runs out of control? And at the end, if you print too much, you end up in something like Venezuela.
You're not suggesting that happens anytime soon?
No, but I don't like the idea. And both parties, you have politicians say, what we've learned is we can print all the money we want.
Right.
We don't have to raise taxes, we just print.
Warren, you share those concerns?
Yeah, I probably could not have conceived of a world as recently as 10 years ago. I would not have conceived of a world where you would have full employment, 5% budget deficits, with actually the probability of those rising from that level, and at the same time have the long bond at 3%. I would have said that couldn't happen. And then people now, you have this modern monetary theory, which there's no question you should borrow, any country should borrow money in its own currency. I mean, that is not like it's some great discovery or something that's been announced, but that,
no, it can be overdone.
Yeah, and that's the point. I mean, that hasn't solved anything, just to say, well, it's much safer to borrow money in your own currency. But the convergence of these factors would have seemed impossible to me, and generally if I feel something is impossible, it's going to change over time. I don't know in what way, but I don't think we can continue to have these variables in this relationship. Now, if we can, then stocks are ridiculously cheap.
See,
What do you think the probabilities are that the U.S. dollar will not be the reserve currency 20 years from now?
oh, I think it'll still be the reserve currency of the world 20 years from now. But that doesn't mean that it's forever.